Welcome to a presentation of Hughes Federal Credit Union's Take Charge, Wise Use of Credit Cards. My name is Elsa Jacklich, and I'm the lead business development representative at Hughes. It's important to remember that credit cards aren't the problem. It's how we use them, or in some cases, misuse them, that gets us into trouble. The goal of this seminar is to give you the tools to use credit cards wisely. In doing so, you can build or rebuild a good credit history. And if you have a good credit history, you'll be rewarded by getting loans at lower interest rates that save you money so you can achieve your financial goals. Our seminar objectives: we'll learn the benefits and costs of credit cards, how to build a good credit history, warning signs of too much debt, how to figure your credit limit, how to avoid credit card fraud, and how to cancel unused cards. Credit cards continue to be favored by consumers who make online purchases. In fact, 47% of survey respondents indicate they prefer to use credit cards over debit cards and PayPal for online shopping and online travel purchases, respectively. It's certainly possible to rent a car or book a hotel room without a credit card. It just could make things a bit tougher. For starters, the hold that hotels and rental car companies place on customer accounts will tie up your actual money rather than your credit line if you choose to pay with a debit or prepaid card. Let's start with the advantages of credit cards. Credit cards are terrific tools as long as you take advantage of their convenience features and take precautions to avoid fraud. If your card is used fraudulently, you have federal protections with credit cards that you don't have with other forms of payment. We'll talk about fraud in greater detail later in the seminar. The advantages of credit cards: you have convenience, buy now and pay back later, widely accepted, carry less cash, rewards programs, no need to show ID or give out personal information, monthly statement has record of purchases. It can be an interest-free loan if paid in full each month. For those cards that offer rewards, for each dollar you charge, make sure you only charge as much as you can afford to pay in full each month, or those so-called perks could end up costing much more because of interest charges. Credit cards require us to exercise caution, or we could get carried away. The disadvantages of credit cards: costly if you carry a balance, it commits future income needed for necessities, it discourages comparison shopping, encourages impulse buying and overspending, items wear out sooner than payments, perks provide incentive to overspend. True costs of credit cards must be disclosed in the credit card agreement. Look for those fees and other charges before you sign an agreement form. Evaluate the fees based on how you use the card. For example, if you think you might have to use cash advances, know what the interest rate is and know that the interest rate is typically higher on cash advances than on purchases. Also know what the fee is for paying your bill late and plan accordingly. Whether you pay by mail or online, know if your bill must arrive by a certain time, for example, 1 p.m. on the due date. And consider these costs: the annual percentage rate or interest rate, the annual fee, the over the limit fee, the balance transfer fee, cash advance fee, replacement card fee, and late payment fee. Here are some tips for dealing with the steady increase in credit card fees. Ask the issuer for a due date that's easy to remember. For example, close to pay date. Use auto bill pay services, pay online, late fee, call and ask for the fee to be waived, especially if you typically pay on time. Be aware of these items. The grace period is the time in which you have to pay the bill before the interest rate clock starts ticking. The average grace period used to be about 30 days. Now it can be 20 days or fewer, depending on the card issuer. Note, if you have a card with no grace period, interest is charged the minute you make a purchase. Even if you have a grace period, it doesn't apply if you carry a balance. Beware of tiered penalty interest rate on late payments. Some credit card companies charge a fee if you always pay in full, or a fee if you don't charge a minimum annual amount. At Hughes, we do not have these fees on our credit cards. Payments to balance transfers are applied to the lowest interest rate first, benefiting the issuer. Universal default clause, the minimum payment trap, and 90 days same as cash. What happens when you make minimum payments? Let's assume your interest rate is 18% and you only pay the minimum of 2% due each month on the balance that you owe. If you owe $1,800 on credit cards and only pay the minimum required, it will take you 22 years to pay off that balance. You'll pay $3,800 in interest charges, so the actual cost of the $1,800 purchase is $5,600. And if you owe $3,900 on credit cards and only pay the minimum required, it will take you 35 years to pay off that balance, and you'll pay $10,100 in interest charges, so the actual cost of the $3,900 purchase is $14,000. These examples assume that you don't make any additional charges during those payoff years. Experts advise you'll always pay more than the minimum, and if possible, only charge as much as you can afford to pay in full when the statement is due. Warning signs you have too much debt. If you're not sure whether you're in over your head with debt, be aware of these warning signs. If 2 or more of these warning signs apply to you, take steps to get back on track. If you only make minimum payments on credit cards, at or near your credit limit on cards, don't know the amount you owe on all debts, use cash advances on cards to pay other bills, denied credit or denied credit purchase, get calls from collection agencies, lie to spouse or family about spending, more of total income is going towards debts. Handout number 1, know what you owe. This is the first step to trim your debt load. Use this handout to start to identify what you owe on credit cards and loans. Building a good credit history. By using credit wisely, you build a good credit history which will follow and benefit you through your financial life. If you have a poor credit history, you may not get loan offers, you may not get job offers or an apartment, and you may be denied insurance, or you may pay a lot more than someone with a clean history. Here's how to build a good credit history, and we'll talk about how to check your credit and credit score in a few minutes. Remember to pay all bills on time, establish credit in your own name. Just starting out, get a secured line of credit. Limit the number of open lines of credit. Have a mix of credit over time consisting of credit and retail cards, mortgage, and installment loans. The prerequisites to using credit. Always have a plan for how you're going to pay off your balance. Here are the prerequisites to using credit cards. Have a written spending plan, track your spending, live within your means, have an adequate emergency fund, pay all bills on time, know how much of your spendable income is safe to spend on credit. Now I'll turn it over to my business development coworker to continue with our seminar.
Thank you, Elsa. I'm Irlanda Cuevas, and I'll be guiding you through the next slides. If you buy items on credit, know how much you can afford to charge each month based on your income and expenses. Consider 2 different calculation methods to give yourself a good idea of what's considered safe for your situation. So let's take a look at the slide, and I'll be explaining calculation 1, monthly take-home pay. If your take-home pay is $2,000 a month, multiply that by 20% to get $400. Your credit card payments should not exceed this amount. If they do, don't add new debt. And calculation 2 is the spendable income. If your take-home pay is $2,000 a month and your monthly expenses for basic needs totals $1,290, the spendable income is $710. Divide by 3 and you get $237 as the amount that safely can go towards credit payments each month. This figure is lower than the amount from the first calculation. Calculation 2 is usually more conservative and generally considered a more safe limit to use. And remember that calculation 1 doesn't account for housing costs. Try to keep your balance below 50% of your available credit limits. First, determine how much credit you can afford given your personal situation, then determine how you intend to use the card or how you've used credit card in the past. This will help you figure out which card is best for you. So let's take a look at this slide. The revolver, that means you're always carrying a balance, you get a card with a low interest rate, and the annual fee matters less. Partial revolver, if you sometimes carry a balance, you get a card with the low interest rate. And a non-revolver, that's the convenience user. If you never carry a balance, you get a card with no or low annual fee and a grace period. Interest rate doesn't matter here. If you're already using credit cards, consider doing two things. First, make a list of open accounts, their respective interest rate, and the balance due on each account. And second, look at the statement for each credit card over the past year to determine how many times you carried a balance to the next billing cycle, and then calculate how much interest you paid. If you don't pay any interest charges, you're using your credit cards to your advantage. Always compare interest rates and understand the fees. Low introductory rates such as 3.9% for the year sounds tempting, but determine what the interest rate is after that. And be proactive in your search for a credit card that's right for you. Contact our credit union for more information about credit cards issued there. Compare rates and terms and remember to read the fine print. Understand all fees, beware of low introductory rates on transfer balances, use caution with rewards programs that require high purchase requirements, and call issuers, including our credit union, and ask about the terms and conditions. Avoid credit card fraud. So protect your PIN and account numbers, use cards online on well-known sites, keep phone numbers to cancel cards in a safe place, never respond to telephone or online requests for personal information. That's considered phishing. And check your statements for accuracy. You have federal protections with the credit card that you don't have with cash, check, cashier's checks, or money orders. Remember, it's not prudent to give a credit card number to an unfamiliar company, so make sure you know who you're dealing with online and offline before doing business with them. And phishing happens when a thief creates a legitimate-looking website to try to lure you into disclosing personal information, such as a social security number, other identifying information, or perhaps even your credit card number. Some additional tips. Make sure to always take your receipts and shred your receipts you no longer need after you've checked your statement for accuracy. Beware shoulder surfers, thieves who use a variety of methods to steal numbers you're dialing or entering on the ATM keypad. Please refer to handout number 3. This is the sample dispute letter if you ever are in this situation. Know your liability if your credit cards are stolen. What's your liability? If you report the loss before a thief uses it, your liability is 0, so call immediately. Your maximum liability is $50 per card, and make sure to keep your phone numbers to report a loss or theft in a safe place, not in your wallet. If you have several credit cards, don't carry all of them with you every day. If your wallet is ever stolen, you'll have to cancel all of them. To cancel credit cards, you need the phone number of the card issuers. For example, if you have a MasterCard or Visa, you'll call the credit union or bank that issued the card, not MasterCard or Visa. You can also photocopy the front and back of each card and keep those copies in a safe, locked place at home. Know your liability if your debit cards are stolen. So, what is your liability? Nothing. For the most signature-based MasterCards and Visa transactions, as long as you haven't been careless. For the federal law, your maximum liability is $50 if you report it within 2 business days and $500 if you report it after that. If you wait until 60 days of receiving your statement, liability can be unlimited. Here are some tips. Keep your PIN safe. Don't use your house number, the last 4 digits of your social security number, your birth date, or the birth date of your spouse or family members, or any other number that a thief could figure out by stealing your wallet. Remember, when you use a debit card, the amount of the purchase is deducted immediately from your checking account. A debit card allows you to access your checking account at an ATM or at some stores that allow cash back on purchases. Be advised that some stores and ATMs may charge a fee. Cancel cards you don't need. Cutting up the cards is not enough. High line of credit could work against you. Follow up. Check your credit report to make sure your account was closed, and write a letter and tell the issuer to notify the credit bureau that account was closed at customer's request. A line of credit is the amount of credit available to you. If you have 5 cards, each with a line of $5,000, your total line of credit is $25,000. A lender may look at your overall situation and ask whether your income could support such debt. Here are some more tips. Experts advise not closing some accounts, or you could end up lowering your credit score. Keep accounts with a good payment history, particularly those you've had a long time. You want a relatively low utilization rate, a number that reflects how much of your available credit you're already using. Experts advise keeping your utilization rate below 25%. Here's an example. If you have 5 credit cards and each has a $10,000 limit and your total balance is $6,000, your utilization ratio is a comfortable 12%. However, if you close 4 of those accounts, your utilization ratio jumps to 60% and lenders may balk. Even though your balance is the same, on paper, it appears you're overextended. Please refer to handout number 5, sample letter to close accounts. The worst thing you can do if you can't pay your bills is ignore creditors. So make a good faith effort and call them before they call you. Before you call a creditor, know what you can afford to pay given all of your other obligations. When you negotiate a repayment plan, don't agree to any plan that you know you cannot afford. If your discussion with the creditors break down, ask for help from the local Consumer Credit Counseling Service. That's the CCCS. They can intervene with creditors on your behalf. But be aware, though, the CCCS may require that you cut up all or most of your credit cards. Finally, don't add new debt. Stop charging if possible until you're able to charge what you can afford to pay in full when your bill comes due. Here are some tips to get back on track. Rebuilding good credit. Pay all your bills on time. Get your credit report and check for accuracy. Consolidate debts. Get secured credit cards if denied credit. Beware credit repair clinics. Seek credit counseling and refer to our credit union where we can help you improve your credit score. And reduce unwanted credit card solicitations by visiting optoutprescreen.com or call 8885-OPT-OUT. If you're having problems getting approved for any credit, such as a personal loan, a credit card, a gas card, or a retail card, consider a secure credit card through our credit union. You'll have to provide collateral, usually cash in the form of a deposit account. The amount in the deposit account usually determines the limit of the secured credit card. These accounts present no real risk factor for creditors and are therefore much easier to obtain. It is up to you then to use that line of credit responsibly. That is, pay off balances on time to establish a good bill paying history so you can get other forms of credit in the future. And call 8885-OPT-OUT to reduce the number of pre-screened credit card offers you get in the mail. On the recording, you'll be asked for your social security number, which is required to get on the list, or go to optoutprescreen.com. Consider these sources for more information about wise use of credit cards. You can contact the Credit Union National Association at www.creditunion.coop, the Fair Isaac Corporation at myfico.com, and the Federal Trade Commission at www.consumer.gov/ID theft. On this last slide, we have our resources for financial literacy. You can visit us at hughesfcu.org financial guide, where you will find Money Coach at Hughes, which is a financial platform that can help adults with their financial lives. And we also have Money Coach for students, more geared toward the students in your life. Thank you so much for participating. To learn more about Hughes Federal Credit Union, please visit our website at hughesfcu.org or reach us at 520-794-8341.